Good morning, friends. So let's start off with the dollar. We are still in the daily range that we've been talking about for so long. But if you can see on the daily, every daily candle's body's respected consequent encroachment. Even on today's print, it's opening up right above consequent encroachment. So it'll be interesting to see how we print today. Do we print and close above it? Do we close below it? That'll be interesting. Again, if we close above it and leave it, our attention will then be brought to this area up here, this weekly zone up here, this buy side, and then this buy side. But let's not get too ahead of ourselves. Let's just focus on what it's doing in this daily range. If you go to the 4 hour, you can also see the body's respecting. We have this one close over. Body's respecting. On the 4 hour, we've had a few candle prints under. We have a lot of high impact news coming out this week. We have GDP on Thursday. Powell speaks on Wednesday, GDP on Thursday, and then we have other red folder events Tuesday and Friday. So a lot of news this week. Nothing today, but it makes sense that they're kind of holding it in this consolidation. Since GDP, Powell speaking, and just a lot going on. So again, just to reiterate, the focus around the dollar will be how does the dollar respect consequent encroachment and this daily fair value gap. Let's go over to NASDAQ. So I'm assuming that you were watching ICT's review this weekend. He had a Twitter space where he broke down this market maker sell model, and he outlined this buy side liquidity up here. We are now below this sell side liquidity. So just briefly, in the market maker sell model, the target is the sell side on this original accumulation zone. So we've breached below that, which is also this weekly fair value gap. So for downside targets, we'll be watching. It's hard because we've left such a large consolidation on the weekly, and we're getting into some, technically it's the sell side. So we're going to be paying attention to see if way back in 2022, so we had this accumulation in 2022, then we had this run up into early 2023, and now we're going to see if we want to see any indication that we're delivering a sell side. And again, so everything I'm saying right now on the weekly is to be held on relative to the weekly. So this might take weeks to play out, but again, we're going to see if we're going to distribute the sell side of this delivery, which means we'll be looking at this weekly fair value gap, its consequent encroachment. Going down to the daily, we're now below these lows, so we're going to see if we want to close today below these lows, or if they just opened it today to knock out the liquidity resting below. I think ultimately we do go lower in the coming weeks, but in terms of today and today's trading, we want to see, is today's candle going to be a candle that continues lower below these lows, or is it going to be a candle that wicks below them? And then for the context of, maybe going back up into this fair value gap, or just taking 1 to 2 days to then continue lower. Because as you can see, we've had a pretty large run. So a pullback into some kind of discount or a premium to then sell at a discount would make sense. You remember the market doesn't just go straight in one direction, it has to ebb and flow. So going to the 4 hour, same story, decent amount of drop. The 4 hour candle, you can see it closed below these lows. So right now in the 4 hour, what we're doing is we're kind of coming back up. The 1 hour is when it starts to get a little interesting. You can see the new week opening gap that we formed. And then the 15 minutes. So regarding today's trading, ICT outlined this 15-minute buy side, and he said if we don't continue below, so this red line right here is that liquidity that was way to the left, those equal lows. He said if we don't continue lower at the open, he'll expect us to come out and take this buy side. You can see the new week opening gap. I highlighted this order block on the 15-minute. As you can see, we came up and touched it once. I think if we start to dig up deeper into this order block / deeper into this new week opening gap, we can really expect this buy side. Notice how, so we gapped up, and this will actually be easier on the 5-minute. We gapped up, and if you look on the 1 minute, this wick right here, that's a 5-minute candle wick. What happened was at the open, we gapped up, and then the 1 minute candle drops down into the gap and then continued higher. That is a pretty classic. That's a pretty classic behavior around a new week opening gap. We then, made 1, 2, 3 highs above it, broke down lower. But notice how when we came through the new week opening gap, we came through with a lot of force. On the 15-minute, it was 2 candles. We had 1, 2, bam. We closed through it with force, retraced up, touched the consequent encroachment very nicely with the candle bodies, and then exploded lower. So the way we behave around these new week opening gaps can really indicate where it really tips its hand on where the market wants to go. So if the market comes up and comes back in and doesn't just bounce off the bottom, it increases the chances that it wants to see this buy side liquidity. I will be watching this order block. I think it's done a good job of keeping price down right now. So when the open happens, I think if we start to go up higher and mess with it, then this buy side is definitely in play. But if we continue lower, then this order block did its job. It's really the same story on ES. As you can see, ES has the same 15-minute buy side. We had a new week opening gap, a little larger than NQ, but it did the same thing. We opened, dropped down into it, came up above it, aggressively priced through it, came back up, touched it, came back down. You can see I highlighted this same 15-minute order block where we wicked into it twice. I'm keeping this little red line because I just want to know when we're below those lows, that sell side liquidity. So that's why I'm going to keep this red line on here. We have this daily fair value gap, which lines up nicely with the top of the new week opening gap. I think NQ really is having nicer price, as you can see. It didn't drop into the new week opening gap before it broke through it, whereas you can see ES kind of did. It dropped through it right here. Just kind of one of those examples why I think NQ delivers price a little cleaner. You can see we had 1, 2, 3 highs before we broke down, so that's always nice to see. But I'm going to continue trading ES just because all year I've just grown accustomed to its own ebbs and flows, and I want to stick to that. So we'll go to the three screens. Get over, mark out our time zones. So the dollar See the dollar rising. Remember, so the thing to pay attention to with the dollar is, and I know this is the 1 minute and we're translating straight from like the 4 hour to the 1 minute, but remember, we were opening right at that consequent encroachment. So if we start to see the dollar making higher highs and higher lows over the next hour, then remember, we're moving further up and we're respecting consequent encroachment. You could probably even refine this order block to the bottom of this candle right here, because you can see these 3 candles are the one that really displayed that change in delivery, but I think I'll keep it on the 15. So the daily bias is bearish. In terms of liquidity, I think as long as we stay below this order block, it's going for this sell side down here. And that means when 10 o'clock comes, we'll probably be targeting that sell side. If it goes above this order block, then we'll wait for a little more information. Now, today being a Monday, normally ICT has said, we don't trade on Mondays because it's usually an accumulation day for smart money on like the weekly candle. But he said we do trade on Mondays when there's high impact news later on in the week. And he always references like a CPI or like an interest rate, but I've never heard him reference GDP. But the market has all year been treating GDP on par, if not a little more volatile than like CPI and like non-farm payroll. So I'm curious as to what he would have to say regarding trading today as a Monday. I think we do, like, I especially with the way the market opened, the markets looked in sync, everything looked healthy. I liked the way the structure was delivering, so we're gonna see if we can find a setup per our model. Okay, I'm watching us make this new low on the 5 minute. It's also a new low on the 15 minute. I think you could have constituted that as a 2023 model. Right into the open. I think when these candles were printing, I was still going over the video. I was still kind of doing the top down. I'll probably have to journal that. And then, I was sitting at my computer pretty early, and I waited till the last minute to kind of start the recording, because I also didn't want there to just be like a solid 10 minutes of me not speaking before the market opened. But I'll probably have to stop doing that, because this was setup worthy. This right here, it was in our time frame, and according to all our rules, we could have entered there. You had the 15-minute sweep of liquidity. We had the 5-minute on the same 5-minute. We had on the 5-minute break in market structure right here, fair value gap after the liquidity was taken to the buy side with the displacement. On the 5-minute, we entered in it once, candle bodies respected it. Dollar rising. That would have been a good 2022 model. Okay, so we got more sell side right here. For now, keeping that in mind. Noting this. We're almost there actually on the 1-minute. We'll wait for 10 though. 10 o'clock. Measuring out 50% of this leg, this fair value gap right here. It's still above 50% of the way to our target. Price is looking pretty heavy. I like where it's at now, just because could not see it. Like, this sell side is 100% going to be taken. And I feel like I would have said that even earlier before we were so close to it. But just because when you get like right here, like when it comes and breaks this low, it's like, okay, it clearly needs to take something before it goes higher. And it seems like it, we left this gap open. That's something to note. Unfilled gaps are starting to become on the radar. So let's see if we close below this. So another good thing I think about the way I've structured my trading is we took this sell side liquidity and it's 943. So our hands are kind of tied right now because, well, I guess, I don't know if this is probably just more general speaking. Our hands are kind of tied right now because where are we going to target? We don't have any sell side to target to right now. And we don't want to target buy side. Like, there's no indication that the buy side is the draw. So we're kind of forced until 10 o'clock to wait. I'm noting the dollar seems to be rising. And in terms of the weekly, this is our draw for the weekly. I don't know if we'll reach that today. I feel like there's probably some other levels in between that we should probably call out first. For example, this Wicks consequent encroachment. Oh. This Wicks consequent encroachment. And then we're at the point in the contract where anything below the daily, it's too far back to get like some solid price. If you do want to look at this area of price, the continuous contract is good enough. I've seen ICT say that. Okay, now that we have taken liquidity on the sell side, any PD array, any bearish PD array, we need to be even more cautious of, because it has it's like justified to go higher now after taking the sell side. Whereas if we turned around before we took that sell side and came out to this PD array, I would have been a lot more confident in saying it's going to use it to go short. Okay, so we'll see how it behaves around this. Yeah, so just to reiterate, if we had come up into that fair value gap prior to taking this sell side, because the draw, remember the draw is the sell side, so it would use it to deliver to the sell side. But since we've taken the sell side, it's not going to use that as an array to price lower. I actually like how aggressive we're coming up right now, because if we start closing above these highs, I think we're going to see the bottom of this fair value gap and possibly the top of it for that buy side liquidity. And that'll give us a lot clearer draw on liquidity for our 10 o'clock silver bullet. Yeah, so I'd really like us to get above these highs between now and 10, the next 10 minutes. Seems possible. See the dollar made a high, turned around, now took out a low. It's making a lower high. Part of me kind of wish if this high right here, this little high, had tipped above that, I would have liked going long off this fair value gap. I think this is still probably a good fair value gap, because I think the draw seems to be buy side now, but I'd rather wait for 10. Also, just keep like reminding yourself that like anything that happens between here and 10, like you don't feel like you're gonna miss out, because we will get that silver bullet at 10. We will get an opportunity at 10. But I was eyeing this. And remember, so now we're getting up into that area of the 15-minute order block, and the draw on liquidity prioritizes the PD arrays, because the PD arrays work off the draw of liquidity. So if we have a bearish order block, but the draw on liquidity is buy side, it's not going to obey this order block. And we already took sell side and moved away from it aggressively. And you can see where we are. It is presenting as a little bit of a roadblock. So but I think the dollar is still making lower lows and lower highs. Okay, so going into the 10 o'clock hour, I am readjusting what I think the draw is now to this buy side. We took the sell side, ran away from it quickly. We're making higher highs now on the 5, and it looks like it's about to be on the 15-minute. So I am intending to look for an entry to go long. The dollar is making some lower lows. Watching the dollar still making lower lows. Paying attention to where this 5-minute candle closes. It's closing above these highs. Seems very likely. I'm going to take this off for right now just because now that 10 is happening, I want to see if we show any kind of direction. Let's put a stop loss on because we don't want to trade without a stop loss. I'm putting it down here. I'm watching this low, high, lower, low break. I'm wondering if that could act as a breaker at any point. It's the low of this candle that we entered in on. Watching how the dollar still looks like it's going for this low. I want to see if we form a fair value gap to the upside within the next 2 or 3 candles. Okay. Let's do that. I could see it coming back down into this and using this for the silver bullet. So we had the 15-minute close above these highs. I like that. I like that a lot. I like where our stop is because it's below the consequent encroachment of this breaker or the mean threshold. If you look on the 15-minute, if this down close candle is an order block, it's below the tip of that wick. I mean, it could still retrace lower and then go higher, but I like where it is. It's below the candle that made this order block, this fair value gap right here. I would even, okay, we kind of missed the shot, but I was going to say, I would buy another and go in on 2 right there. I feel like this is one of those things where I'm not used to live streaming because I'm like my brain's going so fast and I'm trying to like say it out loud. I'm not able to speak as fast as my brain's going, and sometimes I feel like I can't get to things that quickly. Okay, so we are going off the assumption this is our silver bullet. Remember, the fair value gap doesn't have to form in 10 o'clock. We enter on 10 o'clock at 10, in the 10 o'clock range. We came down to the bottom of it, didn't get a candle body close. Came down to consequent encroachment of it, didn't get a candle body close. We have the dollar continuing to go lower. I think the odds of us seeing at least the bottom of this new week opening gap, good. Got 5 handles before it. Oh. 75. 43.75. I'm watching the consequent encroachment of this 5-minute wick. I'd prefer if it held price off. So you can see we're touching it now. It's on the 5-minute. Okay, I want to see the next 2 candles print up close. I want this 5-minute body to stay above this 50% of the previous candle's consequent encroachment. Watching the dollar. I want to see if the dollar takes these lows. It's one of those days where from the top of our fair value gap, it went 5 handles to the tick. Then it's pausing. Okay. Something I'm also watching. Okay, it's getting dirty over here. So mean threshold of this order block. We call this an order block. We had the candle body barely close above it. So it makes sense why we're stalling right here. You can see us, entering into this little consolidation. We're right at the mean threshold of this bearish order block. And remember, this is why I'm remembering my narrative in my head. We took the sell side, and we're targeting the buy side. So if the draw of liquidity is actually up here, then we will go through this order block. We have the dollar, seems to be going lower. So this mean threshold is the context as to why we are, we stopped this 15-minute candle right here. Watching a little SMT divergence on the 1 minute between NASDAQ and ES. NASDAQ right here on this candle made a higher high, whereas ES didn't. Don't do us like that. There we go. Okay, so we got our 5. Let's move our stops to break even, just because, we're playing a little defensive with this account coming back from drawdown. I could see it coming back. I could imagine it spiking down into this and then going higher. Again, that's a certain type of risk I don't want to take. I'll just move it to break even, and we'll see if it wants to run to this buy side. Again, I think it could reprice. It could, we do kind of have a breaker. Like, we had this very dramatic low, high, lower, low on all time frames. It's even on the 15-minute, So there could be a scenario where, like, a 15-minute candle comes down and just wants to tap into the top of this breaker and then send it higher. But again, since we're playing a little defensive here with the account coming out of drawdown, I want to move this to break even. And, saying that out loud, playing a little defensive. It's not too defensive, put it on. Like, the more, if you're in drawdown, you should be reducing your contract size. So I did put it, I have been using 1, but I like how price is printing this morning. So that's why I decided to go with 2. And I've been just waiting for, so price was shitty all last week. I feel like, if you go on trading Twitter and even the YouTube, everyone was kind of talking about, people were struggling last week. Price was not nice. So last week was not the type of price where I'd want to put 2 contracts on, but we have a new week. We just finished a very large time frame sell, this sell side, that I broke down earlier in the video. That was a really big liquidity target that we finally reached. And then after opening this morning and seeing kind of, the markets were looking good, I kind of narrated out how we treated the new week opening gap, came below it, kind of got a 2023 entry model, delivered to sell side, immediately turned around, priced above. If you notice, if you watch this video back, the things that I said that I predicted happened. So we closed above this. I said if we take the sell side, the chances of us coming up here are higher. We started closing above these highs. I said I want to see us close above these highs. We are closing above these highs in the 10 o'clock hour with this buy side draw on liquidity. Another thing I was thinking of was we delivered through, so we gapped up on the new week opening gap. And then in the London session, we delivered sell side to the new week opening gap. So now I want to see if we want to deliver buy side to the new week opening gap. We have the dollar dropping. The dollar seems like it's taken out some pretty significant lows. As you can see, there's not many lows below these two. And we're below them now. Coming up into the bottom of the new week opening gap. So if we start, if we start closing candles, so we closed above it. If you start seeing price respect it to the downside, like we're like kind of wick through it, body close above it, wick down, or even if we like go up a little and then come back down, touch it and go higher, I would definitely be way more confident in seeing the top side of it. But again, remember I said kind of had this stagnation. I wouldn't be surprised if we like shot down just to touch this breaker and then created a big wick and went higher. I'm going to keep the stop at break even right now. Because one of the biggest things I just want this channel to display is more consistency. So I would prioritize like closing the day green than, because there, like I said, there is a shot where like a better stop loss might be our original stop, which is like down here, and it could retrace, then go higher. But I want this account, this YouTube channel and this account that I'm trading to be more focused around like displaying base hits, just getting singles. We're getting singles. Again, I think it could come down, enter this fair value gap, even hit this breaker before going higher. But I'm okay with where we're at right now. We're still below the consequent encroachment of this wick. Like that. I think after retracing this low though, we're definitely probably gonna re-enter this fair value gap. Once we, just the way we kind of like melted up here, I feel like it's gonna, if it does want to go higher, it's gonna want to kind of shake things up before going higher. I did want to see, like, once we got through this mean threshold, I wanted to see it kind of be a little more animated. That's pretty animated. I like that. If this candle and then the next one closes above this high, I like that. But see, so we came above. I'm watching how we came above the new week opening gap. We printed a few candles above it, but then we started printing candles below it, or closing candles below it. So that's like, I want to look at NASDAQ and how it's treating its new week opening gap. So NASDAQ, we came above it, had this one candle print below it, but then it really wanted to return up. I like how the dollar's still dropping. Still got that dollar dropping. Where's the 10 o'clock on NASDAQ? Okay, let's go back to yes. We're currently in a trade. Okay. The dollar is looking pretty heavy. I'm surprised prices. Dollar's pretty heavy. Remember this morning, before the market opened, we talked about, remember where we are in the dollar, where we opened and we're playing around right above the consequent encroachment of that higher time frame fair value gap. So depending on if we went lower or higher on these lower time frames, we can assume we are going below that consequent encroachment or moving above it to the upside. And that consequent encroachment being such a significant level in any fair value gap, it's good to pay attention to how price behaves and navigates it. Okay, so we currently, that was 10 handles right there. Part of me was thinking, do we take this last contract off at 10 handles? I will move the stop up a little bit. Might wait a second. I like where it's at now. This is one of those instances where I'm really liking our draw on liquidity. It's given me a lot more confidence to not want to take profit right now and kind of see, like, do we go and hit that draw on liquidity? I want to see us close above this high. I think that'll be great. I'll move this up a little. My intention with it is just, if we do come back and get stopped out, I feel like we should stop at the mean threshold of this down close candle order block. So if we do get knocked out, maybe we'll get a few, just to put some gap in between these two. Dollar's looking heavy in the background. Again, now that we kind of closed above the new week opening gap, dipped below it, came back up, I would not want to see us fall and close below the new week opening gap. I'm going to move our stop right above this right here. So I want to see this fair value gap hold off price. I mean, it can come down and again touch this order block like I said, but let's lock in some profits. This is one of those things too. It's like, this nervousness you get when you're trying to hold these longer runners. It's something I haven't graduated from. So it's like, we're in this trade. We've been in this trade for a while now, and you just want to see it go. You want to see it go quickly. And it's one thing when you're kind of in this chop right here and you're not anywhere where you would want to take profit. Because you put on the risk, you're not anywhere where you're going to take profit. And then once you get into a range where it's like, I could lock in some profit now, I could make some money now, but I think it can go higher. You have this internal conflict of like the fear of losing the money. It's like, okay, like I can lock in real gains right now. Like we have 431 right now on the debt in this position. We could see that as realized, in the account if we close it now. But something that, all traders have to graduate to is when you get better at technical analysis and you can get more confident in where the market's going to go. I know it's going to go up here. I know it's going to go up here. Then, to know it's going to go up there, you have to leave an open position, and it just invites that fear of like, it could come back on you, and then you're like, oh, like I was right. Like if I just closed it out there, then I would have had more money than I do have. It's just so interesting how the psychological tribulations around trading. And I think that's one of the reasons why ICT says like you shouldn't even be pressing a demo button for months, because it makes you sharpen your skills on technical analysis when there's that fear isn't there. So like right now, for example, we're up 593, and it's like I could lock this in right now. And like, whew, like I locked it in. That's one scenario. Another scenario is it comes against me, and it's like, say I kept my stop at break even and it comes against me and I never saw any of the profits. And it's like, shit, like if I had just locked it in, like that was a dumb move. But then there's also the scenario where it actually goes to the buy side you were predicting. And the way I manage it, so again, like I haven't graduated from like, this doesn't make me nervous. But the way I do it is when we do see a little bit of a run, and this is also, the battle of trading with less contracts. Like if you're new, you should trade with less contracts. And what that does is that like makes it so like now I only have one runner. If I had 3 contracts on, I could have taken a partial at every 5 handles. But since I only had 2 on, it changes the scenario. And it changes the scenario where now you have like all these other like emotional variables come in. Whereas like say I had 3 contracts on, I could have locked in, I could took profit at 5 handles. I could took profit at 10 handles. And then I'd just be like, I don't even care if I get nothing on this, because I already locked in, 15 handles of profitability. Whereas when you're earlier in trading and you're not trading with that many contracts, you can't lock in that many handles of profitability. And it invites that like scarcity mindset a little more. But what I do is I just map out all the PD arrays as we do the longer we stay in a move. And like I make concessions with myself. So it's like I moved it all the way to the bottom of this fair value gap because the chances of it respecting this fair value gap are likely. And if it doesn't, then, I had a reason to. I got stopped out with some decent profit. And I put it under an area that made sense for price to continue. I'm hoping all this rambling makes sense. So another thing I'm watching is we just took this high on the 15-minute too. We took it on the 5. So, that could be some liquidity. Like that would be another place that would make sense to take a partial. You take partials at this is a level of buy side right here. So what I'm doing right now is, if this is 20 ticks of profit, we will, if it comes down and stops us out, we will lock in $500 for the day. I have it here. And this 2 scenarios are, it comes down, stops me out, and I get $500 for the day, or we respect these 2 PD arrays, see the top end of this new week opening gap in this buy side, and we could get like a really solid hit. And I'm happy with both of those situations. So that's the thing. That's what I was trying to get at, is I'm happy with both of those scenarios. Printing a big wick on the this 15-minute candle. I want to see where this body closes. Does it close above this new week opening gap low or below it? Okay, that's interesting. With that being such a heavy wick on the 15-minute, I mean, it makes sense. Again, I think let's see how these next two candles close, because did it just come down there for liquidity's sake? You know, enter this little fair value gap, tap the top of this order block, and it wants to go higher? Or did it actually come down here because this buy side right here was enough, and now it wants to reprice lower? And then if you look on the 15-minute, we closed two candle bodies above this new week opening gap low, but look how big these wicks are. On the 15-minute, it didn't show a real willingness to want to close inside of this new week opening gap range. I think if we got below this low right here, we might be going lower. Let's look at the trades for today. Wow. So 256.25, 256.25. These were the only trades I took today. As you can see, we're still working our way out of that drawdown from that losing streak. I'm excited because I do think that losing streak was seeming more and more like it was just kind of like a rough transition for me to start live streaming my trades. Yeah. So we have been seeing more consistency. You can see all these, not a lot of red in here. This was the losing streak. But we're getting it back. Only 2 trades today. I won't be taking anything else for the morning, and maybe not even the day. I mean, we got 500 on the day. So unless there's like a real nice setup in the afternoon, probably won't take it. I'll probably be on. But now let me show you the executions for people that care. I don't know if people care about that. I'll do a little review. I'll do a little talk about it. So we entered off of this fair value gap. This was the silver bullet for the session. How did I know that was the silver bullet? Well, this upside draw on liquidity was pretty obvious today, and that's one of the reasons why I went in with 2 contracts. How did I know that this upside draw on liquidity was obvious? Because we took the sell side and then aggressively repriced above these highs that were highs on the 1, 5, and 15 minutes. See this? If you look on the 15-minute candle, we came back down, took the sell side, and then boom, in one 15-minute candle, we repriced all the way above these highs. So, and with such a strong close. So see how strong this closes? We only delivered sell side into this new week opening gap. We never delivered buy side. We have these equal highs here that were the target. Right now, it's starting to look like this retracement is because it took this buy side. But that's fine. It's tapping into this breaker, which is like a higher time frame breaker. You could say it's 15. I highlighted it on the 5. Okay. So when we priced above these highs, we did it right before 10. Love that. Love seeing that, because getting above and closing above these highs, that's when I knew, okay, the draw on liquidity isn't down anymore. It's up. It really wants to go up. We're closing above these highs. And it's really the fact that it happened after taking this sell side. We took sell side, repricing up. We get above these highs. You can see this breaker structure on the 5-minute. We respected this PD array to the upside. We came above. I entered a little early on this candle. Then we came back down to it. I entered again. I had my stop down here because this was the candle that made this fair value gap. It was also below mean threshold of this breaker. Great level. I highlighted why we saw this kind of consolidation. This consolidation was happening right at mean threshold of this bearish order block. We came up, price to the bottom of the new week opening gap. I took 5 handles off, moved my stop to break even, came down, repriced higher. And now we're retracing. All this was happening while all this was running up. The dollar, which is this yellow line in the background, was falling and making lower lows, lower highs. So I guess the draw on liquidity, how did I know it was there? It was the dollar making lower lows and lower highs. It was right after we took sell side and then aggressively repriced higher above, making new highs. And then again, the silver bullet entry happens at 10, doesn't have to form at 10. So we saw this. I saw it respect it once. So I knew that when we didn't run quickly right after taking this silver bullet, there was a chance that we would reprice back into it. That's when I entered again. Happened. Yeah, so enjoy the rest of your day.